Hey, James, thanks so much for being with us today.
Thanks, Nisa. I'm really pleased to be here.
So you have a really unique model for factors that you look at in analyzing demand for Bitcoin. Tell me more about that.
Yes, sure. It's based on the concept of the network effect, which basically says that the more activity that takes place on a network, the more valuable that network is. So by measuring the level of activity, or we call it the demand that takes place on the Bitcoin network, we can make a judgment call on whether the network is looking strong and you want to be allocated to Bitcoin, or maybe it's looking weak and you want to be in cash instead.
And what are those factors that go into that determination?
So we've got 4 different metrics that we use at the moment. We look at the fees. Well, I should say that each of these metrics, what's important is that they relate to measuring the network demand in some way. So we've got network fees is one. Fees are important because they indicate how much demand there is for block space. A block can only hold about 3,000 transactions, and a block goes every 10 minutes on Bitcoin. So if there's more than 3,000 transactions that want to go in that 10 minutes, people pay extra to prioritize their transaction. So as fees go up, it tells us that there's more activity taking place on the Bitcoin network. So fees is an important one to track. Another one we look at is the transaction value, which is the actual value of these transactions that take place on the network. So Bitcoin does about 2.4 to 2.8 billion with a B dollars of transaction activity a day. And you know, that tells us how much activity is really taking place. So as that number grows, the network's being used more. And of course, if we're transferring 3 billion instead of 2 billion in dollar terms, but the Bitcoin price is, say, $10,000, then Bitcoins are being demanded more in the sense that more Bitcoin need to be used in order to transfer 3 billion rather than 2 billion, right? So if I need to then use more Bitcoin to transfer the dollar value I'm trying to use, that puts demand on the actual Bitcoin, and that pushes the price up. So we've got fees and transaction value. A third one is network velocity. Velocity, not dissimilar to transaction value, measures how quickly individual Bitcoins are moving around the Bitcoin network. So there are 18.5 million Bitcoin that have been mined, and a velocity of 600% says that those 18 million Bitcoin move through the network 6 times in a year. Again, the more those Bitcoins are moving, the more demand there is for the network, and that is positive for the price. And the fourth and final indicator we use currently is called MRI, which is miners rolling inventory. So the MRI is a really interesting one. When miners generate new coins, they go into their inventory. So they mine it to a wallet, and then they decide, do I want to sell this or do I want to hold on to it and sell it later? And you know, that decision can be driven by a number of different factors. But you know, from our point of view, what we think drives the miners selling is strong price in the market. So looking at this MRI, which is the difference between how much they're selling and how much they're generating, we see that when the price is strong and the market can take it, then miners are selling big amounts of inventory. But when the market is looking weak, actually miners hold back. Funnily enough, people think that, you know, miners just are continuously liquidating their inventory as they produce it, but on chain, we see that that's just not the case. So there you go, 4 key indicators you can look at for tracking network demand.
Fantastic. And so what are you seeing on a relative basis right now for Bitcoin's price movements? Any predictions?
Yeah, that's a great question. You know, this year's been really fascinating. In the run up to this, well, pre COVID-19, what we saw was that network demand was actually dropping. So you know, price had been steadily rising, but network demand just wasn't keeping up with that rise in price. So we had a big drop in price around that time, partly because of that COVID-19, but also, you know, the natural network effect dropping. once price fell, there was a flurry of activity. People got really excited about the lower Bitcoin price, and there was a surge in activity. And we've seen then network demand rising steadily since March up until June. And of course, Bitcoin has rebounded significantly since then. That run lasted until about the 11th of June. Now, at the 11th of June, we started to see a drop-off in network activity again. And so our models basically told us, whoa, the market's getting a bit carried away on price. Right now is a good time to hedge into cash. And so we hedged into cash at about, or the model did, at $9,800. The price actually followed the network again and pulled back to about 9,000, at which point activity picked up again, velocity is on the rise. We've seen fees and transaction activity all picking up the last week and a half, which is a really good signal for price increasing. And right now, as of today, I can tell you that we're pretty bullish. We're seeing 4 out of our 6 indicators are currently on, which means that we are allocating to Bitcoin at the moment.
Any other factors like potentially too many exchanges out there or altcoins, some of the other things you're seeing in the news factor into your analysis?
So right now, they're not. I mean, we keep it really simple. It's a vanilla approach. There are so many fascinating data points now coming out of this industry from, like you say, exchange traded volumes, OTC volumes, sentiment data, like stuff on Google search trends and such that you can incorporate into these amazing models. But with the complexity, you can often lose some of the sort of impetus that the model has. So we've tried to keep it really simple. It's the network effect that drives our philosophy. And what I can say, Nisa, is that at the moment we're only looking at Bitcoin, and Bitcoin has utility. If you look at being able to do intercompany or intercountry, settlements. If you look at the sort of trading activity that takes place, if you look at some businesses taking crypto payments, the Lightning Network, small but growing, it has utility, and that's very exciting. But when we look outside of Bitcoin, something like Ethereum, I mean, we're so eager to get our models applied to Ethereum because I just see so much real utility in that ecosystem at the moment.
Absolutely. Well, thanks so much for being with us today. We look forward to tracking and having you back in a few weeks and see how this played out.
Thank you so much, Nisa. Have a great day.